Hi, everybody. This is Hyperwave, and I am in London. We have Tone already in Malta, and Tyler is about to head to the airport. Tone just got off with Ivan on Tech, and by the way, it was awesome. I just told Tone that I actually thought it was his best interview yet. It was absolutely incredible. So we're going to try to make this short, but I know both boys are on, so this will be fun. All markets are crazy. Everybody's getting angry at you guys a little bit or just going nuts about what you guys have been saying about Bitcoin. I'm going to stop talking because I am exhausted, but also the S&P. So there's a lot to talk about today. So this is going to be really fun. And I will, well, I'll say hi, Tyler.
Hi, good morning. You look terrific. That looks like a wonderful place in London. Tone doesn't look so terrific, but it's a pretty good looking place in Malta. And I'm ready to head to the airport to take off to Paris, and then I'll be in Malta tomorrow afternoon. I'll meet Leah at the airport, and we will start this great conference that Tone has set up called Understanding Bitcoin, and that's something everybody needs to do. I know I need to do it, so that's why I'm going there. Just a couple of very quick notes. We're just going to really talk about two things. One is Bitcoin and the other is the stock market. And if you listened to Tone last night and the night before and the night before, he's kept everybody up to speed on what's going on. We've got a whole bunch of nines coming on Bitcoin on a weekly, on a daily, on a 3-day, on a 12-hour, on a 4-hour. It's very exciting from a technical point of view to be able to see a confluence of so many things at such an important time. But in my mind, the most important thing going on is in the stock market. We're going to take a look at that, and I'm going to give my views on it, and then we'll bring up a couple of charts so that Tone can add his perspective to it. But I was thinking before this broadcast that the thing that distinguishes what Leah and I do and almost everyone else is how few trades we make. In the crypto market, as you know, if you have listened to us, we have not made a trade in crypto since December of 2017. That's when we sold Bitcoin and we said we want to be out of this market in the crypto market, and that has not changed right up through today. So that's pretty boring stuff. It's very great from my perspective that we were able to recognize what the trend was, and we've stayed with that trend. Almost everybody else at various times have jumped in, jumped out, jumped in, jumped out for various reasons, but that's not what we do at Lucid Investment Strategies. We look for major trends, and we want to be with those trends that can make money, and we want to be out of those trends if they're going to lose us money. And we're not so interested in shorting things because that's just risking money again. And you've got to be right twice. You've got to be right in terms of the direction, and then you've got to be right in terms of getting out of those positions. And I don't like doing that. I used to like doing it. I like trading my own account. I love jumping around and buying different things, but not from the point of view of long-term investors. In the stock market, it's been exactly the same thing. Basically, for 10 years, all of our clients were fully invested in the US stock market. That came to an end again almost 14 months ago. Just about the same time that Bitcoin was peaking and starting down, our stock market, for the first time in 10 years, other than two brief periods where we ran sideways for about a year, back in 15 and 16, back in 11 and 12. On both of those occasions, we took something off the table, but not very much. We took anywhere from 10% to 25% off, and we just sat in cash, with the other 75 to 85% still in the stock market. But that changed over the last 14 months. After the last 14 months, we actually went 100% out of the US stock market until December of 2018, 4 months ago. Then what we did is we ended up 50% long the stock market because we were using some historical patterns that occur at the end of the year in December. You have a year-end rally for very technical reasons having to do with these 20,000 mutual fund managers that get paid for beating their indexes at the end of the year. So what tends to happen is a lot of buying goes on in positions that people hold that are winning positions, which pushes them up even further. So we played that bounce in the end of December going into January, but strangely enough, that bounce kept going. It went all the way through January, which is very unusual. And 85% of the time, when January is positive, the entire year is going to be positive. It's an unbelievable record. It doesn't always work, but it's something that you need to be aware on. So at the end of January, we stuck with our 50% long, 50% cash all the way through February because the market kept going up. And then all the way through March because the market kept going up. Well, at some point, I have to make a decision. Do we get out of this market, meaning the US stock market, back into cash and take the profits? We're up over 8% this year, just being 50% in the market. And we're only 4 months into the year, 3 months into the year. So it's been an unbelievable rally. Well, a week ago, I started saying we are at a turning point where either the stock market is going to break to the upside. We had a lot of nines using tone sequential system on indexes like the S&P and the NASDAQ and the NASDAQ 100. We had some conflicting views with things like broadening tops on some of those indexes. And guess what happened? Instead of those nines turning into anything to the downside, they all were taken out with weekly moves above the 9 highs. And Tone can explain exactly how he interprets that. I interpret that to mean that we are now gapping higher and we're only about 2% off the all-time highs. And when I say all-time highs, I mean going back 150 years. We are just a tiny bit away from breaking to all new highs, and we are starting with 2s and 3s on weekly greens that are gapping up above the old 9s. What all of that means to me is that I want to be 100% in the US stock market, which we did on Monday morning. Those clients that didn't get the full message got in yesterday, and we're cleaning up around the edges today. We actually had a little bit of weakness yesterday, which was perfect. It's a good time to get into this market. We've got a little bit of strength today. We'll see where that goes. The NASDAQ is flying this morning. So we'll look at some charts, but in general, this call is like all of my other calls. I am looking for strength throughout the rest of this year and very possibly all of next year into the election, with the possibility that if Donald Trump is reelected, and that is growing very quickly politically, because the Democrats seem to be self-destructing over here, mainly because of what happened on the Mueller report. And they're just not sure how to play it. So they're getting very extreme. And the moderates in this country are beginning to take notice. That's a lot of assumptions on my part. And I can change very quickly. But my presumption now is that a new bull market has started. It's really an extension of the 10-year bull market. But I would look at this move in the stock market after a 14-month pause as the beginning of a new bull market in US stocks. And we'll take a look at some charts to look at that. But first, I'd like to turn it over to Tone and just get his overall view of what I've just said.
Can't hear you, Tone. You're on mute. Perfect. Gotcha.
Sure. So I completely agree with you, Tyler. I think Trump is going to get reelected, and it's not even going to be close. I think it's going to be a landslide for Trump. I think people are so fed up with the Democrats not willing to work with the Republicans and only trying to arrest Trump that it's going to show in the polls. Just like there was a silent majority voting for Trump in the last election, I think this time it's going to be a loud majority voting for Trump. I don't even, I could be wrong, but like, I really think it's not even going to be close. Do you have a specific question for me? I know you talked about all of the nines, and like, it's like almost scary to me. Like, I'm looking at the charts. I know I'm not doing screen share, but I'm looking at it right now. I still think we could make a higher high later this week, and it's going to be like scary how many nines coincide on that day. And the moment I see a reversal candle, I'm going to have to short this market, because like I can't pass this up. I think this could be like a once in a year trade coming up on a short trade, because as much as I want Bitcoin to go up, I can't deny the fact that I've made a living from certain TA practices, and I have to trust my TA.
Absolutely. It's actually very exciting from an analytical point of view. What I'm going to do is I'm going to pull up a couple of charts. First of all, we'll look at the Bitcoin chart, but then what I'd like to do is pull up some of the stock charts so people understand what I'm talking about.
Tyler, I'm looking at the S&P right now, and I didn't look at it yet from my. I looked at it early in the morning, but it was middle of the night or like midnight in New York. I'm looking at it now. The market's already opened. It's beautiful, absolutely beautiful. Like I can't believe we could have new all-time highs within 2 weeks.
It's amazing. I've got the S&P up now, and you can see what Tone's talking about. What we're doing, this is the weekly, and you see the gap above these two last candles, but you also see the 9 over here on a weekly basis. How do you interpret, Tone, when you get a 9? You should be looking for a 1 to 4 week pullback. We got 1 week in between, but even on the week that was a red candle, the wick of that candle went above the 9. We did close below the top of that 9, but then immediately these last 2 moves up have just been gigantic, including the gap between this week and last week. How would you interpret that from a sequential point of view?
Sure. Can I jump over to my screen share to just go over it real quick?
Yeah, of course. Let me get off of here.
Oh, no, you don't need to. You don't need to.
Oh, I don't. Okay, good.
Yeah, you can stay on your screen share as well if you like. They're independent.
Okay, great.
So from a weekly perspective, I never trade the green 1 that follows the 9 because, Leah, you mind muting? I think it's the background of being in the coffee shop. Thank you. I never trade the green 1 that follows the 9, mostly because of, let me slide this over. Mostly because of this exact reversal candle. So I would never trade that candle. Now this is a weekly candle. Now what this is, now this green 2 did not go above a green 1, but it did close above the prior candle's close. From a weekly perspective, this is a 50-50. Do you want to get back in? But I would have used the daily, and this was one of those cases where today is Wednesday, so this was the Friday candle, this 28, and that's the 29. I don't see. Oh, this is the futures market, right? So this was 29th, and so this was the gap. So the gap looks really, really bad on a weekly cash scale but the gap on a daily is not that bad. So right here on this green 2, I could have already started entering bullish trades right here. In fact, I could have started entering bullish trades right here because the weekly 9 coincided with a daily 9, and the daily 9 gave you a 2-candle correction with the reversal candle with a strong candle after the reversal candle. So this area right here allows you to get into that trade while still being on a green 2 weekly, because both your daily and weekly are totally aligned, because this was the top on the daily chart. So everything kind of aligned for a 1 to 4 candle correction with weekly and daily. And at the end of this 2 candle and in the beginning of this 3 candle, if you use the futures market, you're in without the gap. And if you waited so long, then you almost have to buy it at the opening on Monday, though it's a scary buying opportunity because you think the gap's going to close, but it still hasn't. So the time, if you took your profit, see that this is the other thing, Tyler. If you, and I don't want to spend too much time on this, there is a big difference about having the confidence to buy this little pullback. Is a lot of it is dependent how much money did you make on the way up. And if you sat out the entire upswing, this is a scary buy. But if you made a bunch of money riding it to the upside, this is a very confident buy, because even if you're wrong, you're just going to give a little bit of your gains back.
Exactly. That's a great point. And I heard you talk about the sequential 13 that we're sitting on that daily chart, and you said that doesn't worry you in any way. Could you just comment on that?
Sure. It doesn't worry me for 3 reasons. One, I don't see a daily reversal candle on this 13. Now, there was a reversal candle yesterday, but it's at a double top. And also, we did not trade below that candle. So from a candlestick perspective, there's nothing scary here. We are also on a 5 of 9 sequential. So the setup phase, so not sequential, the setup phase is now in a new uptrend. I love buying a breakout after consolidation. And also because of this 9, we're already 1, 2, 3, 4, 5, and tomorrow there's going to be a 6 sequential. So what you don't really like, a 13 reversal is not as strong when there is another count behind it that is just getting started. So there is a whole other 13 that is taking us higher along with a setup, and this is only the daily. The weekly itself is now on a countdown phase to its own 13, because this 9 is now trading significantly higher than the 9. So you can now safely assume that you're going into a countdown phase. Similar to, if I go back, kind of like, this 9 here, where we had a 9 back here, we had a 2-week little tiny pullback, and then you are confidently trading the countdown phase, which right here on this green 3 going above a green 2 going above the 9 gets you on a 3 sequential, and you ride this all the way to its 13. And then look at the candle following the 13. It was a 6 candle, and look, we kept going. And guess what candle we're going to have right here? It's the weekly chart. So the weekly is going to have a 4, but the daily is going to have a 6. So we're already in a weekly countdown phase, a brand new setup phase, and the daily. Like, the only thing that's bearish here is this sequential 13, but I can give you 8 things that are bullish. So I'm going to stick with the bullish phase.
That's terrific. That's great analysis. And those people that have taken your class know what you're talking about. Those that haven't don't. And that's a very good reason to take this class. I am so impressed with Sequential in general, but Sequential with the changes that Tone has made. We've looked at palladium. We've looked at Bitcoin. We've looked at the stock market. We've looked at commodities. We've looked at currencies. And just time after time after time, you're going to find the sequential system with the 3 or 4 major changes that Tone has overlaid on top of it, just killing these markets. Now, people criticize, but anyone that is criticizing this has not taken the time to really study what's going on here. I'm going to pull up my chart again. If you can see this one, let me just see.
Question for you, Tone.
Yes.
DJ Tone. If I'm finally understanding TA correctly, do you see a rising wedge?
I don't see. I don't, because I don't see wedges.
Okay.
I don't trade wedges. I don't look for wedges. I don't recognize wedges. To me, the reason why I don't trade wedges is because I like either parallel channels, because the lines are well, parallel. You don't have much fudging. I like horizontal lines because again, they're horizontal. I don't mind trend lines, and I like triangles because in a triangle you have a horizontal line which can't be fudged, and you have a slanted trend line which could be fudged. And by fudged, I mean it's altered and still legit, kind of like with Tyler's wave 7. It can be, you can constantly change the angle. It doesn't matter. My problem with wedges is that wedges have 2 lines that can be fudged, so which is why I hate them.
Yeah, very interesting. I've got the Dow Jones Industrials up. I just wanted to show everybody this big inverse head and shoulders. We are right now beginning to exceed the neckline on it. There's a similar pattern in the S&P that is already broken to the upside. My target now on the S&P 500 is 3,300. We're at 2880 right now. But what I just wanted to do quickly is to show everybody where we are relative to all-time highs. This is the NASDAQ 100. And you can see this tremendous move we're having this week, and it's only Wednesday. We are this close to all-time highs in the NASDAQ 100. Now, there are some laggards. This is the Russell 2000, and you can see how far the small caps are below their highs. But you can also see the similar pattern developing. So my assumption is a little bit of money in the laggards, like the Russell 2000, like the Dow Jones Transports, which has the exact same inverse head and shoulders. It's working on breaking to the upside. It's still far below its high compared to the big indexes, the S&P and the NASDAQ. But the S&P and the NASDAQ have led for 10 years. They are leading right now, and that to me is really the only indication we need. What would it take to change my mind? Price action. If price action decides to all of a sudden do something other than what the sequential is showing, other than what the stop and reverses are showing. I've got stop and reverses on all these charts, and you can see how we are accelerating above them. Back on the S&P chart that Tone brought up, those of you that know about Consensio see that we are now in a 100% fully bullish position. I've got some trend lines drawn, and to me, my interpretation of almost all these long time index charts is we never entered a phase 4 of a hyperwave. This entire run since 2010 is a phase 3. I am waiting for an acceleration up into a phase 4, and that phase 4 is what's going to take us to the terminal point of these tremendous hyperwaves that go all the way back to 1985. This is a 2, this is a 3. We've been spending a lot of time in our hyperwave research groups trying to understand how big these things really are relative to every other hyperwave we've ever seen. So I know I sound very enthusiastic about this call, and I just wanted to take the time, particularly with an expert such as Tone. I'm so glad he joined us today. Just to give an explanation of how could it be that somebody that almost never trades but sits in a trend for years and years and years got out of that trend and now is so enthusiastic about the new trend. I just wanted to be able to cover some of those. I want to pull up a
Hey,
Bitcoin.
Tyler?
Yeah,
Tyler?
please. Yeah.
What probability, I know it's a little early to say, but in your gut of looking at hyperwaves for 40 years, what is the probability that the S&P and the stock market has entered a phase 4 in December of 2018?
I think it's about 50-50 because I think this phase 3 line is moving up so sharply that if we get to new highs and maybe run up to 3,300, I could see a period of time where we could go sideways before starting up again. So the 50% tells me that this accelerated angle, which is dramatic, could actually be a phase 4. But I would expect some sort of a sideways correction a year from now, 2 years from now, that will give us a better phase 4 angle that isn't so sharp. This one is so sharp right now that it will easily be broken. And 4s don't give you that easy of an out. When they take off, they're going to run for a long period of time, not 10 years like the 3 did, but they could easily run for 2, 3, 4 years. And that means it's going to have to be at an angle sharper than the 3, but I think less sharp than what we're looking at right now. However, because of everything I've just said about this being the longest expansion in history, economically, the longest bull market in history in terms of finance, with this long pause of a year and a half, if we're really beginning up, what everyone's pointing out on Wall Street is the public has not yet gotten back into this market. They were so discouraged by 2006, 7, 8, and 9 that they did not return to stocks. They're sitting in bonds, they're sitting in cash, they're kicking themselves all the way up without putting money in. If we break out to new highs in an accelerated fashion, I believe what will happen is a tremendous move out of bonds into stocks by the public. And that will be a true phase 4 that will accelerate this thing up.
Okay, no, it's a great answer. So it's like, for me to sum it up, the current angle, if this is a phase 4, it's too steep.
Yeah, that's exactly right. Now, phase 4s can sometimes go absolutely vertical, but you can't go beyond 90 degrees. And this one's moving up at 75 degrees kind of an angle. And that seems too steep for me. So I'd like to get up to above 3,000, maybe 3,200 on the S&P, take a break and run sideways for a while, giving us a better angle, which would be the first real touch point of a phase 4. We haven't had a touch point yet, so I think that's still to come. The other thing I wanted to do is pull up this Bitcoin chart. A lot of people are very excited. I'm going to let Tone pull up his because I've got too many things going on mine. But my point on this chart is nothing has changed from Leah and my interpretation of what Bitcoin has been doing for the last 14 months, which is in a long-term bear market with various support and resistance areas that continually break to the downside, just as we've done here. Here we have gone back up above this recent resistance, just as we did back here up into the next resistance area, just as we did back here, couldn't make it even halfway up to the resistance area. Back here, smaller and smaller until you take out the support. This is now the support between 4,000 and 4,200. It had been resistance for 4 months. We were able to finally pop above that, and now we've got massive overhead resistance starting at about 5,800, running to 62 or 6,300, which is why Leah and I took the bet that we aren't going to go to 65 before we get down to 15. This action this week does not change that. But what I'd like to do is turn it back over to Tone.
Ty, can I say something?
Yeah, please.
Okay, if you don't mind, Tone. To say my piece, and I think it's because I'm a little jet-lagged grumpy right now, but I wanted to jump in really quickly. From a fundamental point of view, at least I'll start with the S&P just really quickly. One, not just to note just what's happening when we're talking about the S&P and everything, but also people should start looking at, like, you know, I follow a lot, obviously, activist investing hedge funds, but also what the major companies are doing and who they're targeting. You know, it's not just companies that we're talking about in the news every day. It's not just sexy companies like Tesla and playing those, but it's old legacy companies. It's legacy companies throughout Asia. It's throughout, and that's because they're, well, so they do a majority shareholding. They're shaking up the board, but they believe that, you know, very strongly that the indices are all rising. If you actually not just, you know, the Russell is insane. If you guys are looking at, you know, Europe right now, emerging markets are doing incredibly. I mean, it's like all around the world. But like also, if I could just say my piece, because Tone got me riled up on his Ivan on tech, but also Bitcoin, everybody trolls going nuts on us today. One thing I really wanted to point out, and yes, I am still very bearish. We are bearish, but from a fundamental perspective, at least, and then Tone, tell me if I'm, you know, full of BS. I'll try not to, well, we say shit coins, so full of shit. Sorry, Ty. But like, in my opinion, the fact that they all rose together is not good news, and it doesn't make any sense, and everybody should also just be paying attention to that. I mean, again, I think it's warning signs, and like, what good news has come out for crypto recently, right? There's not greater acceptance. Central banks and governments and major corporations aren't doing much more than playing around a bit in them. Everyone makes fun of how slow we talk, so I go as quick as possible. But bad news, right? You know, we're on the back of Quadriga. There's more hacks, more pumps and dumps. This is on the back of Bitwise. And by the way, if you guys didn't, you know, see that, Bitwise did an amazing job making a report that showed 95% of crypto trading volume was fake. And I don't know if people know, but they presented that to the SEC. So Tony was talking even on Ivan on Tech right before that, yeah, why the heck, like, of course, BACT is going to continue to get pushed back. Why is the SEC or other major institutions or Tyler and I going to be playing around in it when, you know, our asses are on the line? The fundamentals are still bad. But also just to say that Bitcoin's a tiny market. I don't know why everyone thinks that, like, it's absolutely massive. It is a very tiny market. And so just to say there can be any number of reasons to provide for the events that caused Tuesday's spike. We have the mysterious buyer that people are talking about, the April Fool's story about SEC approving ETS. There's so many, but honestly, who cares right now? And yes, like, the price is being like buoyed, like, people are buying, and that's true, and we'll see. But like, why would you stay optimistic with also the shit coins rising, dodgy exchanges, scammers, all this? And like, honestly, like, I'm not going to be optimistic until they fucking die. Oh, I'm so sorry. I didn't mean to say that, Tyler. We will try to edit that one out later. But I'll just say that's why I'm actually really excited to go to Malta. So we can absolutely, like, work. Anyways, I'll stop. Okay, bye.
No, that's great. You said a bunch of very important things. I pulled up a chart on Hong Kong because I am very impressed with what I'm seeing here. Look at this weekly candle that we just had on the iShares Hong Kong ETF. That is all-time highs, and look at the gap that we've got on a weekly basis above the last 6 weeks activity. It has taken us to the highest level that this has been in the history of this market. And I'm also very impressed with what I see in China. We've had a 30% drop from top to bottom, a true bear market. And look what has just happened in the last 4 and 5 weeks. We had a 9. We've taken out the setup. We've gapped up from this point above the 9. And even these, this is the second largest market in the world, second largest economy in the world. They had everything going wrong for them. And even that is beginning to come into line. And I could show you a bunch of other charts. The only thing we are focused on, we meaning my clients, my consulting clients, my discretionary clients, is the US market. We are putting a little bit of money, no more than 5%, into things like China and Hong Kong. The other 90% is all in the US. But I cannot overstate how impressed I am with what the US stock market has been able to do. And with that, I'm going to get off of here because I'd like one more shot with Tone, letting us understand what these 9s lining up on Bitcoin could really be telling us in terms of the next 36 to 48 hours.
Sure, I'm going to try and go through it real quick. That was an awesome rant, Leah. Thank you for that. And yeah, so by the way, after I did my video this morning and I mentioned how the altcoins were like pumping harder than Bitcoin, somebody that someone that I respect messaged me privately and like yelled at me about not looking at the volume of those shit coins, including Bcash and Bitcoin SV and all the other ones. They were pumped on such tiny amount of Bitcoin. I mean, we're talking like like $1 million or $2 million was able to pump these shit coins 10, 15%. Like the volume was so little that was able to pump it that it's just so artificial and it looks good with percentages, but in reality, it doesn't mean much. It actually reminds me of a little joke. Back on Wall Street, I had a friend that was sitting right next to me for a while. He was a programmer. And then we used to talk about like percentages and statistics. And he would say, like, he'd use his uncle. He's like, my uncle always used to say, percentages and statistics are like bikinis. What they display is revealing, but what they conceal is vital.
I love it. That's great.
So all right, so let's get over to my chart. And so right here we have a weekly 9. Now you can see my outlook. I'm still looking for the bear market until proven otherwise. I'm gonna get into the time cycles when I go home and I get to some time to think and play around with it. Here is the zoomed in version. This is a weekly 9. It would be very interesting if we close at the top of this candle. I think there's going to be a significant pullback at the end of the week. The reason why I think there will be is because I'm looking at this weekly 9, and then here is the daily chart. The daily is going to give me a 9 tomorrow. If tomorrow we're trading in like the $5,200 area, $5,250, I'm going to be looking to try and time that top, because if I go over to the 3-day chart, the 3-day chart is already on a 9. Now, I'm not sure when this rolls over. Like, I'm not sure how many. Oh, this candle started on April 1st. Today is April 3rd, I believe. Yes. So yes. This is the last day. So tomorrow is another 3-day candle. So the 3-day candle has topped on a 9. The week still has a few days to go. If we go back to the 1-day chart, we're going to get a 9 tomorrow. The 12-hour chart, we have 8 more hours to go today. And then, so tomorrow's 9 daily is number 8 and 9 on a 12-hour. And here's the 4-hour. The 4-hour is on an imperfected 9 right now. And I think this 9 can go into a 13 and another 9. So the 4-hour will probably will give you another opportunity. And the hourly chart topped on a 9 beautifully earlier today. So at 4 a.m. New York, no, I'm at UTC +1. What's up with my time zones? At least let me go to UTC time.
You travel too much. Your computer's confused.
Right.
I know. Should I go to New York time? All right, so this is New York time. I'm kind of used to New York time. So we topped at night at 11 p.m. So it was just as I was doing my video, right? I think earlier today, this morning at the airport.
Yeah.
And topped beautifully on a 9. This is the 13 from that 9. But remember, just like what we said about the S&P, we're already in another countdown phase, right? So this was a 9. This would have been a 1. That would have been a 2. That would have been a 3. And if we get another update, that will be a 4. So we're in another countdown. So the hourly chart is still actually kind of bullish right now. I am bullish Bitcoin right here because I think the top is coming tomorrow, sometime in 24 to 36 hours. We should have a Bitcoin top, and I'm really looking forward to timing it. Oh, my price updated. Yeah, this was an artificial spike. Ooh, speaking of, I should really open my trading account. I'm not sure if I exited GBTC. What was the, 1 second, Tyler. Let me go to candlesticks because I know where my exit was. I know where my limit order was. And I want to see if it got filled. The high today was $6.06. My limit sell order did not get filled. It's a little bit higher than that. So I'm still anticipating getting out of the other half of my GBTC position at a slightly higher price than 606. That is my current limit order. I got out the other half of my position yesterday at 570, and
Terrific.
the other half is higher than 606. So I'm still waiting to exit that position.
Great. Well, that's terrific. Exciting times from an analytical point of view, exciting times from the point of view of either saving money. If you have ridden this up in crypto, in Bitcoin, you've just heard, I think, what is a definitive analysis of why you need to be taking profits. If you weren't able to do it at 6,000, if you weren't able to do it at 8,500, if you weren't able to do it at 10,000 or 12,000 or 13, this is a chance anyway to step aside and let's see what the technicals do in terms of development. I don't need to step aside. My clients don't need to step aside. We've been out for a very long time. We are looking for the time to buy. It will come. I think it will come from a much lower level and many months from now. Nobody knows that. I don't know that, but the evidence will show up in the price. On the other side, there is a place to put money, and that is in the U.S. stock market. You should have had money in the market for the last 4 months. If you didn't, this is a brand new opportunity, in my opinion. And this is not specific advice to any one person. I am telling you what I am doing personally and the kind of recommendations I'm making to those people that are clients of ours. I cannot think of a time in history, and not only the 40 years I've been doing this, but I'm a student of the history of markets. I can't think of another time that is equal to what we are looking at right now across all asset classes in terms of either danger and risk or opportunity and reward. And you just have to understand that it's all based on this macroeconomic problem of debt and credit in the form of fiat that is run rampant since we had to close the gold window back in 1971. It all points to that. And that's one of the reasons that we are all so excited about the Bitcoin market. Because up until the time of the Bitcoin market, there was no alternative except a gold standard. And every one of them failed for one reason or another. So we've got this debate going on about what is really an asset, what is really wealth, and it's all coming together in the charts that we're talking about today. Thank you very much, Tone, for joining us. I'm going to run and jump on a plane. I've got a 2.5-hour drive down to Atlanta, and can't wait to see everybody back in Malta tomorrow.
Bye, everybody. And by the way, if anyone comes to London, there's this bar called Found. It's awesome. And also, I went to Pachamama East. If you guys are Londoners, it's really, really cool too. And then I geeked out all morning at Hatchard's, so I'll stop there. Tone, we're going to see you tomorrow. I am so excited.
Awesome. Hey, what time do you land?
About 2 o'clock. I get in about 1 o'clock, so I'm going to wait for Leah to land, and then we'll both head to the hotel.
All right, very cool. I'll see you guys here tomorrow. Yeah, I'll see you guys here. I should be back in that area by 2 p.m. We have to go over to Blocks Live for an interview, but after that, I'll be back here.
Terrific.
Yay.
Great.
All right,
And carnivory dinner tomorrow night.
Can't
Oh
wait.
my God, it's tomorrow night? Yes.
Mhm.
Okay, good. Okay, bye, everybody.
Great. Bye-bye.